A market crash is coming. Will you be ready? That is the big question. If you train with us every day, the answer is yes. If you take the trainings that are available for free at the website, if you listen to us 10 minutes a day, if you fill out your trade worksheets, maybe your daily market worksheets, at least your weekly market worksheet, all available for free in the show notes. Perhaps you purchase and read our book. Maybe you become a Patreon member and get that extra training. Whatever, 10 minutes a day is what we ask you to do with us, because as you get better at doing this, by practicing it on a daily basis, you will see things as they occur. You will recognize weekly vertical crossovers, which are the real magic that we have in the charts. You'll also be able to use that quarterly chart, and you'll be able to see things like the magic of our quarterly chart, where you see real systemic breakdowns like the 2008 crash, like the crash back in 2000 when that occurred. You can see those things. You can also see big market run-ups. And you can see what's going on right now as we enter into the second quarter of a red down candle. So there's some pressure there on the market. Again, market's looking okay, up a little bit for the day, but there's some systemic weaknesses there. We want you to study with us every day and to be ready to read these charts and not be like the lemmings who run off the cliff and lose everything they have saved for years, maybe their entire lifetime. In fact, you'll know how to not only read the stock charts, that's the S&P 500 and the NASDAQ 100, and any other chart you want, but you'll also be aware of what's going on with bonds and with gold, which can be potentially safe havens. You also, if you take that training we have at the website, Inverse ETFs, How to Make Money When Markets Crash, that also cues you in to inverse funds that actually go up when the market goes down. So we have a lot of options, and that's why we diligently train every single day. How do you get to Carnegie Hall? Practice. How do you get good in chart reading, in investing, and in trading? You practice, you practice, you practice, and perfect practice makes perfect. Doesn't mean that you do this once in a while. And of course, when the market's running up, everybody's a genius. Well, if your boat's in the harbor and the tide comes in and it floats higher, are you somehow responsible for it floating higher? No, the tides come in. Same thing happens when the tide goes out and your boat's grounded. Is that your fault? Well, if you were the dummy that left it tied to the dock, maybe that was the problem. But again, make sure you know what the tide's doing. And with our charts, following them on a daily basis, looking at the weekly, looking at the quarterly occasionally, looking at the 2-day and the 4-hour, you can get a feel for what's really going on. Now, let's jump back into this market up for the day, both in the S&P 500 and the NASDAQ 100. S&P 500 up a little bit. Nice candle that's already starting to form, well above the prior candles, and that's good to see. Derivative oscillator still losing momentum. Price percent oscillator still heading up, about as it did over the prior week. Now, one thing that's interesting is we look at the weekly trend line, and things still haven't moved back into that trend. That really, really fell off. So what we might start doing is looking for a way to redraw a trend. We really don't have a great one to even try redrawing. A little premature there. We'll just continue to sort of watch and see what we see as this week goes on and see if we can make use of a new trend line when it allows us to do so. And again, why do we like trend lines? Well, they help us, we might be able to find, we like to try to connect three, and it's sort of hard to do that. Maybe that's about the closest that we're going to get. And again, the more that we're able to make use of trend lines, again, these are just visuals that help us see when more things break down, when price movements start getting a little iffy. So we are looking at the weekly chart. Again, only thing that's really moving down is that derivative oscillator. It peaked all the way back on the week ending the 1st of March. We go from the weekly to the 2-day. What do we see going on there? Trying to pull away from the red signal line. And again, we are going into the 3rd. This is just the first day of the latest 2-day candle. We saw the prior one end on Monday. Price movements above the 2-day and well above the weekly. And again, things are separate. Derivative oscillators now switched over from negative to positive. So that's good that we see that moving along. And again, let's go from the 2-day to the 4-hour. Saw a bump up in the morning and then a pair back in the afternoon with a red spinning top, means indecision tending down. We can see that derivative oscillator heading down. Price percent oscillator gained a little energy in the morning, lost it in the afternoon. Keep your eye on things. We are waiting for a pullback on the S&P so that we can potentially find a jumping in point on that 4-hour chart if this up movement will continue long enough to give us that opportunity. Back to the weekly chart, moving to the Qs, which is the NASDAQ 100. What do we see going on there? Of course, we see the price percent oscillator heading up nicely. Derivative oscillator, a little less than flat. Price is moving up on our Heiken Ashi candlestick. That's good to see. 2-day chart shows us going into the 3rd candle of up movement. Quite nice. I think we can get rid of the prior trend line that we had, trying to draw a new one. We see the derivative oscillator gaining momentum. Price percent oscillator slacking off a little bit. First day of that latest 2-day candle. We go to the 4-hour chart. And again, we see that there was up movement in the morning, pairing off in the afternoon with the price percent oscillator going flat and derivative oscillator continuing to lose momentum. We'll just see how much higher we can go. Remember, we had that jumping in point last Tuesday, the 12th. Things are up quite nice since then, somewhere around about, we'll say the 175 point. It's hard to actually locate that with the Heiken Ashi candlesticks, but somewhere around the opening, we'll just say 175, up as high as 180. That's beautiful. So again, $5 in 5 days or so. Not too shabby. So we'll continue to keep an eye on the Qs. Remember, if you are in that play, continue to watch your 2-day and your weekly, once you've made that entry point. And of course, that 4-hour, we say all the charts all the time. But again, that 4-hour chart is something for you to look at in league with those bigger charts in particular. We go back to the weekly chart and move on to 20-year bonds, down 0.20% for the day. And again, looks like the price percent oscillator has gone flat. Derivative oscillator continues to be negative 3rd week running. We're really just having a sideways slide. Price movements, of course, below that weekly trend line. And things are just weak in bonds. We go from the weekly to the 2-day. And of course, the 2-day just won't get enough energy to cross over going up. Still in a confirmed down move. Derivative oscillators losing that downward momentum, but the price percent oscillator looks like it's heading down. So again, just barely, but not strong at all. 4-hour chart actually at the end of the day crossed back over going down. So we're waiting for bonds to settle out and tell us what in the world they're going to do. Just don't have a trade in bonds right now, and that's fine. If we don't have a trend to follow, we don't follow a trend. Again, first rule in the stock market, don't lose money. Second rule, make money. We make money, that is on our practice trades, by following established trends. We are trend followers. Safest, most efficient, and effective way to do it. Now, interesting, we keep waiting for gold to cross over going down, if indeed it's going to do that. Hasn't done it yet. In fact, looks less likely at this point than it did on Monday. Derivative oscillators gaining downward momentum. Price percent oscillator, again, looks like it's trying to draw a green up candle. Just doesn't want to give up the ghost and crossover going down. We'll just continue to monitor gold, see what it does the rest of the week. 2-day chart, we look at that, and of course, going into a 4th up candle. Hasn't crossed over going up yet. Flat derivative oscillator losing downward momentum. continue to watch gold and see how it shakes out. And we look at this 4-hour chart, and of course you can see where gold bottomed somewhere around the 121 point, and then just started moving up from there, then sort of down and sideways. It's been really going sideways for the last many days. You can see that on the bigger charts too. And of course, what that's showing us is that gold is just not wanting to roll back over yet. Crossover going down on that weekly chart. Maybe this is a pretty firm bottom in gold. So we'll wait and see. We'll wait for bonds and gold to shake out. Again, we are still happy about where things are going in the Qs, and we're keeping our eye on the S&P 500 to see if indeed there's going to be a jumping in point after a pullback in the opposite direction on the 4-hour chart, if indeed that occurs, and then it crosses back over going up. That will again give us a jumping in point with the 2-day and the weekly heading in that same direction. And we do that simply to try to find a jumping in point. Don't just jump in at any point, because that's when things can roll over and hammer you. So that's where we are, folks, as we end the day on Tuesday, go into Wednesday. Hope that you're following these things with us. Do want you to check out the special training that we have attached to this training for you today, and it is about what to do when markets crash, how you can prepare yourself for that. It is attached to the show notes that we are sending out to everyone who subscribes. Hope that you are a subscriber. If you're not, go ahead and subscribe so that you're able to get that special training we put out just for you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.